I've taken thousands of trades and tested hundreds of different strategies and indicators throughout my 5+ years of trading. And in today's video, I'm going to share with you my first trading strategy that I used to make over 5 figures per month. This strategy uses the only 2 indicators that I've used in my trading career. In this video, you'll learn exactly how to set up these indicators on your chart, learn how to use them, and how to combine it with your trading strategy. Then I'm going to show you live trades that I took in real time. All right, so first things that we're gonna do is set up my indicators here on TradingView. If you don't use TradingView, that's all right. You're gonna have to go into your own broker and set up the indicators. It's gonna be the exact same thing, and I'm gonna show you how to customize it. But in this case, what we're gonna do here is scroll up into the indicators tab, which is on the top left-hand side. We're gonna click on the indicators, and what we're gonna search up here is exponential moving average. As you can see right here, it's called the moving average exponential. We're gonna click on this twice, as you can see here. And on the left-hand side, what we have is 2 indicators popping up, which are both the EMAs. So what I'm gonna do here is go onto the settings. As you can see on the inputs, you're gonna type in 9. It actually comes defaulted as 9, so you don't have to change the first one. You can go onto the style, you can change the colors if you like as well. But on the second EMA, what we're gonna do is go into the settings. We're gonna go back onto inputs, and we're gonna change this to 21. So we're gonna change this to 21, and we're gonna also change the color here as well. I'm just going to change this to orange. So as you can see, we have 2 lines on the chart. We have the 9 EMA and we also have the 21 EMA. We're going to go back onto the indicators tab and add one more indicator. And what we're going to search up is Vwap. So this stands for volume weighted average price. You're going to click on this, and currently you can see we have quite a few lines on our chart, which might make it a little bit confusing, but we're going to go into the settings here on Vwap, and then we're going to get rid of the upper bands, and we're also going to get rid of the fill here as well. So the only thing we have is Vwap, and then I'm going to go and change the color once again just to differentiate it, and now you can see the Vwap that I have here is purple. So as you can see right here, what I have is the 9, the 21, and Vwap, and these are the 3 main indicators. Technically 2. We have moving averages plus Vwap. So we just set up the indicators on our chart. Now I'm going to explain exactly how to use these EMAs along with Vwap to combine it with our trading strategy. And what I want to mention here is that trading indicators by themselves is not going to make you profitable. These indicators should be used as confluence with your trading strategy. When I first started trading, I thought that indicators were going to make me profitable, and that is definitely not the case. I tried MACD, RSI, Bollinger Bands. I've tried so many different indicators, and what I come to realize that the less is better in trading, and you should only be using these indicators in combination with your strategy. So I'm not going to use these indicators as a standalone strategy. I'm going to use it in confluence with the strategy that I already have to give me more context and give me more confidence in my trades. So with that being said, let's talk about the EMAs and how we can use them. Okay, let's first talk about the EMAs and how we can use this in our trades. So when we're trading EMAs, there's really only 2 scenarios we want to be trading them, either in an uptrend or in a downtrend, right? We also have consolidation / chop. So this is also a possible scenario here as well. So basically what the EMAs are is an exponential moving average. It takes the average close of each candle and it divides it by the period. So in this case, if we're talking about the 9 EMA, it's going to take the last 9 candles and find the average. 21, it's going to take the last 21 candles and find the average. The difference between an EMA and an SMA is that the EMA is going to weight it more specifically closer to the recent candles compared to the SMA, which is going to take the average of the whole period that you're calculating it based off of. Let's first talk about the 9 EMA. When we're in an uptrend with the most momentum, we're specifically going to be looking for the EMAs and to see how price reacts on the EMAs. So a lot of times when price has nice clear trends towards the upside, what we'll respect here is the 9 EMA, right? This is a default EMA. As soon as you type it in, this is one of the best EMAs to use, especially on the 1 and 5 minute chart. And you'll see a lot of times when price gets farther away from the EMAs, what it'll do is it'll come back and retest the EMAs, and this will be used as levels of support for continuation towards the upside. And the exact same thing will happen on the downside. When we're bearish, price will come back up and towards the EMAs and use these levels as retests for continuation lower. So whenever we're trading, a good rule of thumb is that if we're above the 9 and 21 EMA, that means we're bullish. If we're below the 9 and 21 EMA, that means we're bearish. So these can be used in combination with one another. I'll talk about what the EMAs will look like in the third third option is when price is consolidating. So whenever the EMAs are consolidating, that's a good indication that price is choppy because it's taking the average, for example, the last 9 candles. So if the EMAs are flat, that usually means we're consolidating and price is just going above and below the EMAs. And this is something we don't want to be trading. So we specifically want to be trading in a clear uptrend or in a clear downtrend when we're above the EMA or when we're below the EMA. Now let's go on to how we combine the 9 and the 21 EMA to use this to our advantage. So now in this case, we can draw both the EMAs since there's going to be 2 lines on the chart. So the first EMA we can draw here is the 9 EMA. You can see we're in a clear uptrend. So we're going to mark this out as blue. And now we're going to also draw our second EMA, which can be orange. So as you can see right here, whenever the EMAs cross over, that's a good indication that we're bullish and we're starting to see more momentum come into the markets, right? It's basically called the 9 and 21 EMA Cross. And whenever the blue line gets back above the orange line, that's a good indication that the market is starting to flip and we're going to start to see some more upside here in the overall market. So once price breaks back above the EMAs, this is a good sign that we'll start to see more momentum pick up and we'll continue towards the upside. And once the EMAs start to flip back, so for example, now the 21 is starting to slow down and now we have the blue line, which ends up crossing back underneath. This is a good sign that will end up slowing down and we'll end up potentially having a reversal. So this is a great indication of when the market's going to start to slow down is when the EMAs cross back underneath. So the 9 and 21 EMA cross is very powerful, especially when understanding momentum. So if price is above the 9 and 21, that is very bullish. And if we're underneath the 9 and 21 EMA, that means we're very bearish and we can expect a potential reversal in the markets. And when using these EMAs, it's a great way to gauge how relatively strong or how relatively weak we are compared to the chart. And as I mentioned, this is the best way to determine if we have a lot of momentum on a ticker. And finally, what we have is volume weighted average price, which is called Vwap. And it's basically calculated based off the average price of a new market session. So every single day at 9:30 a.m. Eastern Standard Time, it resets and it takes the average price of every single candle it's formed starting from New York session, and it just gives us a moving average to help us determine if we're bullish or bearish intraday. So one of the easiest and best ways to determine if we're bullish or bearish on a day is if we're above VWAP or we're below VWAP. If we're above VWAP, there's a good indication that we're bullish and we're going to be looking for longs. If we're below VWAP, then we're going to be looking for shorts because we're bearish on the day. Now, with this being said, we understand how to use the EMAs. We understand what to use VWAP for. Now let's go on to a chart to see exactly what this will look like in real time and how we can use it in our trading. So as you can see right here, what we have is a chart illustration of how we can use these indicators to our advantage. So we have 2 EMAs along with VWAP. And as you can see right here, VWAP is our purple line. So as I mentioned earlier, if we're underneath VWAP, we're going to be looking for short positions because we're bearish. If we're above VWAP, we're going to be looking for longs. So you can see price right off the bat is continuing to push towards the downside. Once we're underneath this 9 EMA, you can see we have a nice continued push lower and we have the most momentum, right? You can see price comes back up, right? Holding the EMAs. Once the EMAs kind of start crossing, you can see momentum starts to slow down, but we're still bearish because we're holding underneath VWAP. And then you can see right here, once the EMAs flip once again, you can see we start having a lot of momentum. We break underneath a key level of support. The EMAs start holding, especially the 9 EMA, as you can see here on the 1-minute chart. Once we get that flip, we're holding the 9 EMA. You can see how big of a move we have towards the downside because now price is holding this 9 EMA. We're underneath the 21 EMA as well. And we have a really big push lower. And now you can see right here for the QQQ, really strong push lower. And then finally, once we get that EMA cross, that's where we have a mini reversal and we start consolidating once again for this kind of pushback towards the upside. So you can see right here for the overall QQQ. So number one, what we're going to be doing is taking a look at VWAP. If we're above VWAP, then we're going to be looking for longs. If we're below VWAP, we're going to be looking for shorts. Next, what we're going to do is take a look at the EMAs. If we're below the 9 EMA, we're below the 21 EMA, we're going to be looking for shorts. If we're above it, then we're going to be looking for longs. So by using these moving averages, it gives us a good bias and what we can be looking for. Just because it's under VWAP doesn't mean we're just blindly going to be looking for shorts. Similar thing to the upside, we still have to have setups and we still have to have proper context, but it's going to give us more context and potentially give us a bias by just looking at these indicators. So currently I'm on the 1-minute chart. It works very well on the 1-minute chart. And we can also be looking at this on the 5-minute chart. And you can see right off the bat, right, EMAs never crossed, right? We're holding underneath VWAP all day. We're basically riding the 9 and 21 EMA. So we're in a very clear downtrend just basically from the start of the day by looking at the 9 EMA, right, 21 and Vwap. And you can see very clearly that price was staying heavy, holding the EMAs and end up selling off towards the downside. And as I mentioned earlier, it works best in trending markets. You don't want to be trading EMAs when you're in a range, because when the EMAs are in range, that means the price is in a range in itself. More examples here. As you can see, once price opens, the EMAs start curling. We're basically holding the 9 EMA, and you can see 9 EMA was held all day, very bullish. Once it starts kind of consolidating around this 9 EMA, that's when price starts to slow down. But you can see we're still bullish because we're above the 9 and 21. We're still above VWAP here as well. And then you can see it comes back down, taps this down close candle, which is an order block, holds the 9 EMA, and then we end up having this next leg towards the upside, right? Holds above the 9, holds above the 21. We're above VWAP as well. So everything is checked off. And you can see nice trend higher. And then we basically have nice trend day all the way towards the upside. So now we have a good gist of a trending market towards the upside along with the downside. Let's go over an example where price just consolidates and when to be cautious of using these EMAs. Okay, so as you can see here, this is a good example of where the EMAs might be a little bit trickier, especially if you're strictly just basing it off of EMAs in itself. As I mentioned earlier, it's going to be used as a confluence with your trading strategy in itself. If you look at the EMAs, we have volume weighted average price, which is right in the middle, and these EMAs will potentially show you some false signals, especially if you're just strictly using EMAs. In this case, price never really has nice continuation above the 9 or 21. We're just kind of flirting around VWAP all day, and that's usually a good indication that price is going to be consolidating a lot more, especially if we're just sitting around VWAP. So in this case, you can see price tries getting above, or we tried having continuation. Ultimately, we weren't able to make a new high or have continuation above the highs. EMAs, you can see, start crossing here as well. So there's not really a good sign that price has a lot of momentum, just strictly basing it off of the chart. So you can sometimes look at the chart in itself and see if we're going to have trending markets. EMAs, as I mentioned, are used best in confluence with your trading strategy. So if you have a higher time frame thesis, or if there's some sort of news event where you expect some trends, then you can be using this. When we're in consolidation, right, be very cautious of the EMAs, because a lot of times if the higher time frames is not doing anything, then the lower time frames isn't going to do too much. So now let's go on to some examples that I have for us today, and then I'm going to go over some live trades as well. All right, so on my first example here, we're on Apple. This was on September the 16th, and you can see just based off the higher time frames, I'm leaning a little bit more towards the upside. You can see we end up having this push lower, immediately got bought back up. Currently, we're kind of flagging here on the higher time frames. There's clear room back towards the upside. We also have relative strength as well. So for Apple coming to market open, I mentioned if you can break above your previous day highs, we can see a nice potential push up and towards your 241. So we'll mark out key levels, and then we'll go on to the lower time frames to see the price action that we have intraday. All right, so around the lower time frames here, the key levels that we can have marked out is just from the wick to this wick here as well, which is your previous day highs. Next levels towards the upside, if we can get above, will be our 238, and then we can mark out this level, which is all the way back from this high, which will be your 240. Now let's go on to the lower time frames and play out the tape. So as you can see right here, within the first 10 minutes of market open, we have no clear direction. Number one, we have not broken above your previous day highs, which is our key level here on the higher time frames. Currently, if we're looking at just intraday price action, we're looking at VWAP or look at the EMAs, there's no clear direction right off the bat. So we're going to be waiting for number one, right, key levels, which is our previous day highs, and we're going to be looking for any sort of momentum, which is either breaking above our EMAs and VWAP, or now it's going to be breaking underneath our EMAs and VWAP for a potential continuation towards the downside. As you can see right here, if I zoom in now, Apple is starting to gain some momentum, right? You can see the EMAs are flipping. We're now above VWAP. We're showing a lot of strength here as well. We're having this nice continue push above where we're breaking above your previous day highs. And also it's our 5-minute range here as well. So we have a lot of confluences for Apple for a potential continuation as long as you can maintain above your previous day highs along with this 5-minute range, right? Maintain above the EMAs and VWAP that we're going to continue higher. So now with this pulling back, let's keep an eye out on Apple. So as you can see right here for Apple, we're breaking above our previous day highs, above our 5-minute range. You can see the EMAs are starting to curl here as well. We're above the 9, we're above the 21, we're above VWAP. This candle, you can see that the buyers are stepping in based off of this hammer stick candle. This is where I personally go in long with a stop just to break below. And what I'm looking to target is a higher time frame key pivot point all the way back here at this 241. So now we can mark this out and we can play out the tape. And you can see right there for Apple, we end up having a nice continued push towards the upside, right off our key levels, which was our previous day highs, along with our 5-minute opening range. And of course, you can see right here, we also had another tap of the 9 EMA right off a key level here as well. So we had multiple confluences, and it also combined with our EMAs as well. So as you can see right here, the EMAs were consolidating on the lower time frames. Once the EMAs flip, we have that 9 and 21 EMA crossover. We get over VWAP. You can see volume starts pouring in. Now we're well above our moving averages, which is our 9 EMA. And you can see we ride this towards the upside, right? Very clear momentum. Every single down close candle is being respected here as well. So this is a great indication that price is going to continue towards our higher time frame key levels. As long as we hold down close candles, we hold that 9 EMA, we're going to have a nice, very strong trend towards the upside, especially on the 1 minute time frame. So this is a great example. I'll show you guys a live session here in a second on when I took this trade in real time. And now let's go on to the next examples that I have for us today. So as you can see right here, what we have is our next example, which is on Tesla. And Tesla has a personality of when it likes to run, it loves to run. So it respects the 9 EMA very, very well. And just to give us a little bit more context on this example, we recently just broke outside of a clear level of consolidation, higher time frame 355. We've been talking about this for a while now on the pre-market prep. We're looking for the break above our 355. You can see previous day, we end up taking a trade on this day. And you can see coming to the next day, we're fairly bullish, right? Big trend, weekly breakout. We have a lot of volume on day number 1. Day number 2, we're looking for a continuation right off the bat above its previous day high. So we can mark out key levels. In this case, we can mark out our previous day highs, drag this over. And now let's go on to the lower time frames. We can also mark out our pre-market highs here as well. So now let's play out the tape here on the lower time frames here on Tesla. So you can see right off the bat here on Tesla, we're above our previous day highs. We're also above our pre-market highs here as well. You can see right off the bat, we're already above the EMAs. Let's keep playing out the tape. And as you can see right here, what we have is a really big extension. So we have a very big extension here on Tesla. And what we're going to mark out here is your 5-minute range. So we can mark out your 5-minute range. We're well above the EMAs. We're well above VWAP here as well. What we'll be doing is looking for kind of that first pullback. So on Tesla, one of the best setups that I like, especially if we're in a very clear trend, is that first pullback setup. Because majority of the times that first pullback always gets bought up. Very rarely will price go straight up and then just go straight down. Majority of the times that first dip will get bought up. So on Tesla, the first dip is a very high probability setup, especially if it has a huge push higher like this. So for Tesla, let's play out the tape. As you can see, that first dip got bought up here on Tesla, but never really came back down into that 9 EMA or that 5-minute range. So this would have been a very, very aggressive entry. But all we're doing is waiting for kind of that pullback down towards that 9 EMA for continuation towards the upside. Let's keep playing it out. And as you can see right there, Tesla has that nice tap right into that 9 EMA. We also have our down close candle here as well. So these are areas where you could be looking for buying opportunities. If you keep playing out the tape, we can see that basically Tesla is respecting the 9 EMA very nicely. Of course, this is an outlier trade just because it had higher timeframes plus news, but you can see just based off that 1-minute chart that how nicely Tesla was respecting that 9 EMA. If you're looking for trades like this, usually it has more to do with higher timeframes plus news instead of technicals. And this, of course, is strictly just based off of momentum in itself. But you can see Tesla riding that 9 EMA very nicely towards the upside. You can see comes back to that 9 EMA once again, bounces off of it. And you can see basically just respects that 9 EMA all day. Respects that 9 EMA. Finally, it starts to slow down just a little bit because now we're underneath that 9 EMA, but it comes right back into this down close candle. You can mark out this level. Finally, it pulls back down into a key area where you're now going to have very clear risk. You can be looking for a trading opportunity off your 9 EMA with the stop just to break below, and you can be looking for a 1 to 2 risk to reward ratio. This is where you can get in with the stop loss at the break of this order block along with the 9 EMAs, and you could be looking to target a 1 to 2 fixed risk to reward ratio. And you can see right there on Tesla, it ended up respecting the 9 EMAs perfectly. You can see that 21 EMA held right along with the 9 EMA. And you can see nice push. Once it reclaimed back above the 9 EMA, you can see this is where the volume started picking back up and you could have scalped it for a nice trade. So you can see just based off this 9 EMA, there was plenty of opportunities where you could have just scalped it towards the upside, right? Nice bounces for high days. And this is a great example of using the 9 EMAs in itself, but this only occurs when you have the higher timeframes involved and when there's a lot of momentum momentum. Majority of the times, you always want to be using these EMAs as confluence with your trading strategy. So you want to be looking for trades off of your previous day highs, your 5-minute ranges, your order blocks. But the only time you can use the EMAs in itself is when you have something that's more important, in this case, which was the higher time frames plus the news that we had. Now let's go on to the next example that we have here on Tesla. The next example that we have here is on Tesla. This was a few days ago, and you can see another setup that's forming. We have higher lows being built. The flat top is in place here as well on the 15-minute time frame. What we're going to be doing is looking for the break above your previous day highs for a continuation towards the upside. So key levels that we can have marked out is going to be this old high here, which is at your 430. So this is going to be the key level that we're going to be looking for the break, retest for continuation. Now let's go on to the lower time frames. So as you can see right here on Tesla, we're pushing higher right off the bat. We're breaking above key levels. We're above the EMAs. We're above Vwap. So the key levels that we're going to have marked out is going to be this down close candle, which also happens to be your 5-minute range. Now what we'll be doing is looking for really the retest off this level for continuation back towards the upside. You can see right here, price is getting pretty overextended. So we're basically going to be looking for the retest of this level. And you can see right here, Tesla is pulling back into our retest level. We have our down close candle, which is your 5-minute range. We also have our order block here as well. And we also have the 9 EMA. So in this case, for Tesla, the reason why I was interested in this specific pullback right here, instead of waiting for that perfect retest, is number one, the context. If I pull up the QQQ chart at this time, Tesla was relatively strong and QQQ started breaking it back above its VWAP along with its EMAs. So this one had relative strength on the day. So I was more interested in looking for continuation higher just based off a higher time frame thesis. So this is where I actually got in on Tesla. My stop would have been the exact same thing, which would have been the break below this order block. So regardless of the setup, right, my stop loss is going to be the same, right? I took it at the 9 EMA, so I'm going to have a little bit of a wider stop, but my thesis is still the same, right? I'm looking for the hold of your 5-minute range, a hold of this down close candle, hold of this 9 EMA for this continued push higher. Stop is going to be a break underneath, and I'm looking for a high day plus continuation back towards the upside, which will be a minimum of a 1 to 2. So in this case, right, Tesla, as I mentioned, the personality of this ticker, it's very strong, loves to respect the 9 EMA. So sometimes the retest might be off by a few cents, right? It's not always going to be perfect every single time. I talked about this a few videos ago where the break and retest is not a specific level in price. It's an area of price. So you don't want to be way too precise because sometimes that will not allow you to take certain trades, which might be very obvious. And of course, Tesla was very bullish on the higher timeframes. So you didn't want to miss out on this potential trading opportunity. Now let's play out the tape. And as you can see right there on Tesla, we end up having a nice trade towards the upside, right? Holding above that 9 EMA. And you can see, as I mentioned, Tesla loves to respect our 9 EMAs, right? Holding down close candles here as well, along with the 9 EMAs. This was also potential another entry, which would have been off our down close candle and then plus another retest. You can see hammer stick candle. So of course, if you wanted to take another setup, right? Risk, break underneath, and you would have been looking for a scalp back towards the upside once again. So you can see how many opportunities are used based off of the 9 EMA plus using our other confluences as well, right? The 9 EMA, very powerful along with the 21. And of course, VWAP is just an indication of if we're bullish, we're going to be looking for trades above VWAP. If we're bearish, we're going to be looking for trades underneath VWAP. So now with this being said, let's go on to the live session where I took Apple in real time. 4:14, maybe later into the session for continuation towards the upside. We'll keep an eye out on that. I do like Apple and Nvidia here. These ones do have room towards the upside above your previous day highs. You can see a push up in towards your 240 here on Apple. So if you can potentially capture an Apple retest, now it's going to be off your previous day highs. This one has room up in towards your 240. Apple, you can look at the 240s here. Okay, I'm going to try some apples. I'm going to try some of the 240s here. Risk for me, break underneath your previous day highs. I think we can see some room up towards your 240 here on the higher time frames. So as you can see right here, I just got into some of the Apple calls above your previous day highs. You can see a nice little strong reaction here on Apple or above your 238 here. You can see the Qs is very weak on the day. So Apple has a lot of relative strength. So in this case, I'm interested in Apple. We're above our 9 EMA here as well. We're above VWAP. So showing a lot of strength. And now I'm looking for this continued push back towards the upside here. Apple, we'd like to see kind of use this previous day highs, potential move up in towards, as I mentioned, 240s. It seems like the market's probably just going to keep heading lower unless we can find some buyers kind of right here on the QQQ. As for Apple, right, take some off up into this 240. We'll see if we can get that push up towards last week's highs, but that's now really only going to occur if the market stalls or if we can get a potential reversal here. So as you can see here, I'm scaling on Apple up into this 241 along with this 241.30, just locking in some profits along the way just because the Qs is showing a little bit more weakness. And then eventually Apple did end up reversing before it hit our weekly objective and then end up just pulling back towards the downside. As you can see there, that was a super solid trade on on Apple. I actually did end up taking another trade on this day as well, which was Oracle above your 5-minute range. You can see very similar thesis, right? 5-minute range, also your 9 EMA here as well, kind of scalp this up and towards your pre-market highs 320. As you can see how powerful these EMAs are, right? Qs has been downtrending all day underneath the 21, underneath the 9, whereas Apple has been showing a lot of strength. We're above Vwap, we're above your 9 and 21. So these are actually doing the complete opposite. Qs weak on the day, Apple relatively strong. So you want to be trading names that have relative strength or that have relative weakness, because these are the ones that are going to have clear trends in the markets. You don't want to be trading something in this case like Tesla. As you can see, within the first 30 minutes, we just have a lot more consolidation. We don't have a clear break above the EMAs. We're just kind of flirting around VWAP. And something else to note when you're trading EMAs is that number one, right, you can get faked out quite a bit on the lower time frames. So that's why you want to stick to those higher time frames. And number two, the longer you wait into the session, the more clear of a picture and clear trend that you're going to have. So make sure to use this, as I mentioned, in combination with your strategy and system. I always talk about this. Indicators are not the holy grail of trading, right? Use this in confluence to give you more conviction and confidence in your setups. Don't use this as a standalone for buying and selling. And with that being said, I hope you guys enjoyed the video. If you did, appreciate if you guys drop me a like and sub. Just a quick note, we do have that event that is coming up tomorrow. So if you guys aren't signed up, make sure to sign up for that, and I'll see you guys then. All right, take care, everyone. Peace.